In sustainable investing, tax incentives and financial benefits are key motivators. Governments are offering tax credits and grants to businesses embracing environmental, social, and governance practices. This shift not only promotes eco-friendliness, but also enhances a company's financial health. Businesses can reduce tax liabilities through sustainability credits, making green investments more viable. ESG tax incentives encourage private companies to adopt sustainable practices affordably. The availability of grants and subsidies supports this green movement. Sustainable practices also lead to direct economic benefits like lower utility bills. Businesses earning and selling emission reduction credits, ERCs, turn eco-efforts into profitable ventures. Consumer trends toward climate-conscious choices are growing. Companies with sustainable practices are increasingly favored by these consumers. This creates a cycle where environmental responsibility and profitability are intertwined. Companies adopting these changes contribute to environmental conservation and benefit from financial incentives and consumer support. Carole, what are your thoughts on the balance between government incentives and intrinsic corporate responsibility in achieving sustainability goals?
I think incentives are exactly that. I think government incentives really help to promote things like clean transportation, efficient heating and cooling, but also encourages companies to take action on setting targets. So I think the incentives and the rebates are helpful, coupled with the regulation is going to be very positive. We've seen a lot of that movement here in the US. The Inflation Reduction Act, $373 billion in federal clean energy and production incentives is certainly going to have an impact and help to mitigate climate change, while at the same time being responsible for the creation of over 170,000 jobs. We also had the Infrastructure Investment and Jobs Act, which will help to build infrastructure needed for the electric vehicles that we're hoping are going to be on the road and get purchased, as well as retrofitting for clean energy. So, we see some of those solar panel manufacturing companies that we were discussing early now starting to move some of that manufacturing here to the US. So for solar, they make solar panels as well as Enphase and Flex, which create the microinverters for the solar panels, are now at work creating production facilities here in the United States thanks to that infrastructure investment. So we see it at work. I mean, I'm sure we've seen it across the globe as well. We also see some companies then passing that on to consumers as a way to inspire further spending and further boosting those sustainable practices. So, for example, Con Ed is passing some of the rebates onto their customers to encourage installing solar panels or heat pumps or electric charging. So love the word incentive. I think it works. Everybody likes to feel like they're getting a little bit of support to move that infrastructure in the right direction.
Yeah, right.
If I could jump in, just talking to the investors in my network, we see the Inflation Reduction Act and the IIJA, the Infrastructure and Jobs Act, as just a massive public policy shift that is making it feasible to really do this transition away from fossil fuels and shift to abundant, reliable, affordable, clean energy. It's an industrial policy, and it's really impacting investors, because now investors can move money into these kinds of projects. So we're seeing big investors like Macquarie, global investor that focuses on infrastructure. Instead of building more of the traditional fossil fuel infrastructure, They can move their money into the clean energy infrastructure and know that these incentives are going to support their dollars. So the bottom line becomes readily accessible. They make their money back faster. And with the companies also getting the incentives, they're sure that there's going to be uptake on the infrastructure. So that's just one example. But I would say, these couple of policies, these incentives, the tax benefits, but also there are loans and loan guarantees, all of them are making private investment more viable. And we're seeing it really accelerate the move into these kinds of companies and projects. Project finance is a very specialized area, but we're not going to see all of this infrastructure built by government alone. It's going to take partnerships with private investors and companies and government. And this is really good news from our perspective.
Mike, from your perspective, how effective are green tax incentives and rebates in encouraging businesses to adopt sustainable practices?
Well, I agree with both what Carole and Kirsten have said. The Inflation Reduction Act is an extraordinary incentive. In fact, we see German and French companies coming into the United States to take advantage of the tax benefits. The one thing I would just add is I would like to see a little more flexibility in terms of where those incentives go. So if I can go back to my cobalt example, it's what we've done is basically incentivize manufacturing or investment in the United States. And I'm all in favor of that. I want to help our economy. I want people to have jobs in the United States. But sometimes there's a public interest, public policy interest in supporting things that are outside the United States. It might be a South Korean company making solar panels, and it certainly would be that formalized mine site in the Congo. I've talked to American companies that want to do the right thing, and they say if we had some financial incentives, it would make it a heck of a lot easier to do it. So I think we need to be a little bit more ambitious or expansive in how we extend these credits or these tax benefits.
I was thinking that on the social side, that's also one thing holding back, right? Because it may be difficult to have social incentives. But from what you were saying, if it's geographic, perhaps it can have a social impact too.
Exactly.
Yeah.
Thank you.
I would just add that I think the investors that I'm working with see not only the benefit of these incentives and loans and loan guarantees for their own investment, but they're also really looking at how the policy realm, state level policy, federal level policy, and global policy can support their investments. So the investors are stepping out as advocates, saying we need to maintain these kinds of incentives. We need to grow the pot so that more companies can benefit by them. And as Michael just said, we need to make sure that there are good policies that are stable, particularly in emerging markets, so that we can really move there and ensure that these are low risk investments. So they are speaking out more. We saw lots of investors going to the COP and speaking at the COP, saying to the governments, we need you to provide the policy framework into which we can pour our money. So it's a partnership.
Yeah, it takes a village.
Yeah,
we're going to move to
a village
segment 4.
Big investors.
Right.